Today we're going to look at Chapter 2, which focuses on the need for payroll and personnel records. Within this chapter, we mostly are going to focus on the Fair Labor Standards Act and how to determine hours worked by the employee, commonly used methods to record time worked, and major methods of computing salaries and wages. Now, the Fair Labor Standards Act has an employer and employee relationship. A common law relationship of employer and employee exists when the employer has the right to control both what work will be done and how it will be done. For minimum wage, this is going to include all rates of pay, including commissions, earned bonuses, severance pay, on-call pay, and shift or weekend differentials. Current minimum wage is $7.25 per hour. Exceptions include, first of all, training wage, which is $4.25 per hour for the first consecutive 90 days if the newly hired employee is less than 20 years old. The other exception is institutes of higher education, retail or service establishments, and farms. They may employ full-time students at 85% of minimum wage. Scooting that up. Situations where wages higher than federal minimum wage must be paid are going to include employees of federal contractors, and states with higher minimum wage. For tipped employees, the minimum tipped wage is going to be $2.13 per hour. The employee must make $7.25 per hour when combining tips and wages. This accounts for the tip credit, which is $5.12 per hour. Basically, that's just $7.25 minus $2.13. Turning the page. Next up, we look at work week and overtime. The work week must be 7 consecutive 24-hour periods. This equals out to 168 hours. FLSA states that overtime pay is at 1.5 times regular pay. We also in this chapter focus on exempt versus non-exempt employees. Exempt means that they are exempt from some or all FLSA provisions. Examples of exempt employees are listed down below. We have executives where their primary duty is managing, they supervise 2 or more employees, and they have the authority to hire, fire, and promote. We have administrative where their primary duty is to perform office work, and they regularly use discretion and independent judgment. We have professionals where the work requires advanced knowledge in science or learning, and the knowledge is acquired by a prolonged course of instruction. We have business owners who own at least 20% of equity and actively manage business operations. We have those who are highly compensated. They earn $107,432 or more. They perform non-manual work, and they regularly perform one of the exempt duties of an executive, professional, or administrative employee. We have computer professionals. Their salary is at least $684 a week or $27.63 per hour, and their duties consist of system analysis techniques, design of computer systems or programs. We have creative professionals, which requires invention, imagination, originality, or talent in artistic or creative endeavor. And finally, we have outside salespeople. Their primary duty is to make sales or obtain orders for services or use of facilities. They're regularly away from the employer's place of business, and there is no salary test. Blue-collar workers are always entitled to overtime pay. Scoot this up. This is going to include police officers, it's going to include emergency medical techs, it's going to include firefighters, paramedics, and licensed practical nurses. In the Equal Pay Act, the amended FLSA is required that men and women performing equal work must receive equal pay. There are also some penalties. Employees have recourse if their employer does not pay them according to the law or misclassifies them. The U.S. government may bring civil or criminal suits against employers who violate FLSA. Turning the page. Now, some things FLSA does not cover: extra pay for weekend or holiday work, pay for holidays, vacation, or severance, limit to the number of hours of work for people 16 and over, holidays off, vacation time, and sick leave. For computing wages and salaries, the most common pay periods are as follows. First up is weekly. This is going to be 52 pay periods per year. $40 hours each pay period. Bi-weekly is going to be 26 pay periods per year. And it's going to have 80 hours each pay period. Do not get this confused with semi-monthly, which is twice a month or 24 pay periods in a year. These are going to have different hours each period. Then we have monthly. This is 12 pay periods in a year. These will be different hours each period as well. Employers may have different pay periods for different groups within the same company as well. When we calculate overtime pay, the most common method is that we're going to calculate gross pay, which is 40 hours times the employee's regular rate. Then the overtime is calculated by multiplying the hours in excess of 40, which gives the overtime pay. 1.5 times the employee's regular rate is the overtime rate. The overtime rate times the hours over 40 is the overtime pay. Another method is where we calculate gross pay on all hours worked, including overtime hours, at the employee's regular rate. Then we calculate an overtime premium, which is the hours in excess of 40 times an overtime premium rate, which is the hourly rate times 0.5. Turning the page. Main steps for calculating period wage rates to hourly rates. So if it's an example where somebody's paid bi-weekly or semi-monthly or something like that. First thing we'll do is we'll annualize the salary. Then we'll calculate the regular weekly gross. Then we'll calculate hourly pay. Then we'll calculate the overtime rate, which is 1.5 times hourly rate, and add the overtime to the regular gross. In our first example, Farron, a non-exempt employee, earns salary of $1,500 per month. He's paid weekly and has 43 hours in one pay period. Calculate his gross pay. First up, we're going to annualize the salary. We'll take $1,500 per month times 12 months. We'll get $18,000 annually. Next up, we'll calculate his regular weekly gross. So we'll take the $18,000 divided by 52 weeks. We'll get $346.15 weekly gross. Then we will calculate the hourly pay. We'll take the $346.15 divided by 40 hours. Get $865 regular rate. Then we'll calculate the overtime rate. Take the $865, it's 1.5, we get $12.98 overtime rate. Then we will calculate and add the overtime to the regular weekly gross. So the regular weekly gross was $346.15. Plus, we'll take the overtime rate of $12.98 times the 3 extra hours that he worked, and that will come out to $385.09. Next up, Carmen worked 47 hours last week. Regular hourly wage rate is $12.45. What are Carmen's total gross earnings? Well, the good news here, we don't have to annualize. We don't have to figure out a lot of things. We get to just determine what her regular earnings look like and her overtime and add them together. So first up, hourly rate is $12.45. We multiply that times 40 hours. We get $498 weekly gross. Then we're going to take that $12.45 times 1.5 to get the overtime rate. It's $18.68. Then we can determine overtime earnings. 68 times 7 hours, 130.76. And then we can add the two together. $498 plus 130.76 is $628.76. Turning the page. Eve, a non-exempt employee, earns a salary of $2,000 per month. She's paid semi-monthly and worked 4 hours of overtime in one pay period. Calculate her gross pay. First up, we'll annualize the salary. We'll take the $2,000 per month, it's 12 months, we'll get $24,000 annual. Then we'll determine what that looks like semi-monthly. We'll take $24,000 divided by 24 pay periods. That'll be $1,000 semi-monthly. Then we'll determine her regular hourly rate. I think we'll do it by weekly amount, and then we'll determine the regular hourly rate. So we will be taking the $24,000, dividing it by 52 weeks. That'll give us $461.54 weekly. And we'll take the $461.54. We'll divide it by 40 hours. That will give us $11.54 as the regular hourly rate. To get the overtime rate, we'll take that $11.54 times 1.5, get $17.31 overtime rate. To determine her gross pay, we'll take the $1,000 that she earns semi-monthly plus $17.31 times 4 hours of overtime. We will get $1,069.24. Sheila earns $35.75 monthly for a 35-hour week. For overtime work, she receives extra pay at a regular hourly rate up to 40 hours and time and a half beyond 40 hours in any week. During one semi-monthly pay period, she worked 10 overtime hours. Only 2 of these hours of overtime were beyond the 40 hours in 1 week. We're going to compute her total earnings. So first up, we will divide her monthly earnings by 2 to get her semi-monthly earnings because she is paid semi-monthly. So we'll take $35.75, $17.87.50 semi-monthly. Next up, we need to figure out her hourly rate. So we're going to take the $35.75, which is monthly. We're going to multiply it times 12 months. That'll give us $42,900 yearly or annually. To get that down to weekly, we'll take $42,900 divided by 52 weeks. $825. To get that down to hourly, we will take $825 divided by 40 hours. Oh, I'm sorry, not on this one. We'll be dividing this one by 35 hours. This one's very tricky. Let me explain. She's paid this amount for a 35-hour week. If she works more than the 35 hours, she gets her regular hourly rate up to 40, and then time and a half beyond 40. So this $825 is going to be divided by 35 hours. You'll likely come across one of these in your homework or continuing payroll problems as well, so make sure you refer back to this problem when you're working it. So the $825 is getting divided by the 35-hour week. We get $23.57 per hour. For her overtime rate, take $23.57 times 1.5. Scoot this up. Okay, so we have a bunch of rates here. We have her semi-monthly amount, okay? What we will do is we'll start with just her regular semi-monthly earnings. To that, we're going to add her hourly up to 40 hours. So she worked, let's see, 10 overtime hours, but only 2 of these were beyond 40 hours in a week. That means that 8 of them are going to be at her regular hourly rate. It's going to be $188.56. Then we're going to do the 40 or the over 40, so the overtime over 40, which was 2 hours, and that'll be at $35.36. That's $70.72. We'll add all 3 of these together to get her total earnings. We will end up at $2,046.78. Turning the page. Next up, I want us to take a look at piece rate pay. This is used to pay workers according to their output. It must equal minimum wage with the overtime calculated one of two ways. Method A, units produced times the unit piece rate, is regular earnings. Regular earnings divided by total hours is the hourly rate. Hourly rate times 0.5 is an overtime premium. And then regular earnings plus overtime premium times overtime hours equals gross pay. In method B, units produced in 40 hours times the piece rate plus units produced in overtime times 1.5 times the piece rate equals gross pay. You may get different answers for each of these methods. That is a-okay. I think that when we look at our example here in a few minutes, we will also get different answers. Either method is okay, but when you're working on assignments, make sure you use whichever method they're telling you to use. In our example, 4,812 units is expected in 47.25 hour week. 600 of those units were produced in extra hours. Mustafa is paid $12 per unit. Calculate gross pay using both piece rate methods. So we'll start with method A. We'll start with units produced times the unit piece rate. So units produced, 4,812. Unit piece rate being 12 cents. $577.44 regular earnings. In step 2, we take that $577.44, divide it by 47.25 hours. That gives us $12.22 per hour. Then we take that hourly rate, $12.22 times 0.5 to get the overtime premium, which is $6.11. Finally, we take our regular earnings, $577.44, plus that overtime premium, 6.11, times 7.25 hours of overtime. We get $621.74 in gross pay using method A. Scoop that up. Below that, I'm going to do method B. Method B. We know that 600 of the units were produced in extra hours, which means 4,212 produced in regular hours. So, for this one, units produced in 40 hours, 4,212 times 12 cents. Plus, units produced in overtime, 600. Times 0.5 times 0.12. Calculating all these, you end up with $613.44 in gross pay using method B. Turning the page. Also have commissions. This is stated percent of revenue paid for each transaction. In our first example, we have Sam who sold $40,000 of product. His quota is $31,500. He gets 2% in excess of quota, and his annual base salary is $30,000. If he gets paid bi-weekly, calculate his total gross pay. First up, we can figure out his base earnings. We take $30,000. We divide it by 26 pay periods. When we are bi-weekly, it's 26 pay periods. Get $1,153.85 base earnings. Then we'll determine commission. We'll take the $40,000 that he sold. We'll subtract out his quota of $31,500. Then we'll multiply that times 2%. so 0.02. It's going to be $170 in commission. Add the two together, we get total gross pay, $1,323.85. Last one, Michael Bolton receives an annual base salary of $95,000 as a salesman in the northern region. Annual sales quota is $500,000. For all sales over his quota, Michael receives a commission of 5.5%. For the current year, sales in the northern region total $898,000. The amount of salary and commission due to Bolton is what? Well, the main salary is going to be $95,000, so we already know that. So let's determine the commission. We take the $898, we subtract out the $500. Then we multiply that times 5.5%. That's $21,890. To the $21,890, we add his base, $95,000. We get $116,890 total gross pay.